Welcome to this explainer. Look, if you're running a community pharmacy, you already know exactly what it takes to keep those doors open. You trained to dispense meds, counsel patients, and run a vital health business right at the heart of your community, right? But let's be real, you definitely did not get into pharmacy to become a payroll expert. Today, though, we're diving into a crucial insider secret that so many owners are completely in the dark about. And it all revolves around the Pharmacy Industry Award, specifically MA00012. I'm going to drop an uncomfortable truth on you right out of the gate here. The absolute biggest hidden liability in your pharmacy, it's not your stock, it's your payroll. We almost always assume inventory or commercial leases are our massive financial risks. But the reality? It's the slow, quiet accumulation of tiny accidental award errors. It's a real trap. Literally, nobody notices these little leaks until a former employee, a union, or the Fair Work Ombudsman comes knocking at the door. And because community pharmacies operate on super tight, single-digit net margins, just a few years of compounded payroll errors across your team can literally wipe out your business. Okay, let's dive right in. Here's our roadmap for today's explainer. First, we'll hit the hidden liability. Then, we'll look at why pharmacy awards are hard. After that, we'll unpack 5 hidden payroll traps, look at the incoming payday super threat, and finally, wrap up with 3 steps to compliance to keep you totally protected.
So, starting with part 1, the hidden liability, where small errors lead to massive back pay bills. Underpayments are practically never deliberate, but the whole, hey, we didn't mean to excuse, yeah, that won't save you legally.
Which brings us to section 2, why pharmacy awards are just so hard. Honestly, navigating the MA00012 maze feels like it's literally designed to punish any set-and-forget payroll system.
We're essentially dealing with a triple threat of compounding complexities here. First up, long trading hours. Pharmacies open early, they close late, and they trade 7 days a week. That means evenings, Saturdays, Sundays, and public holidays are all in the mix, and every single one demands different penalty rates. Second, you've got a really mixed workforce. You're blending full-time, part-time, and casual staff right alongside juniors on age rates, students, interns, and your fully qualified pharmacists. And third, and honestly, this is the most dangerous one, classification creep.
So what is classification creep? It is the most common, totally invisible error in pharmacy payroll. This happens when an employee gradually takes on more skills and duties, but no one formally moves them up the pay scale. Let's say someone starts as a level 1 assistant. Over 2 years, they get their certificate 3, they start doing dispensary support, maybe ordering, or even supervising juniors. Their day-to-day job has completely evolved, right? But nobody actually updated their job title in the payroll system to match reality.
Moving to section 3, the 5 hidden payroll traps. This is exactly where the leaks happen.
Let's systematically unpack the exact places where your cash is leaking out. Trap 1 is misclassification. Check out this number, $26.55. According to our sources, that's the level 1 base rate per hour from July 1, 2025. Now, remember that classification creep we just talked about? Well, if you have an assistant hired at level 1, but they're out there performing level 3 duties now, and you're still paying them this $26.55 base rate, you are underpaying them for every single shift they work. The award classification is driven by the actual duties they do on the floor today, absolutely not the job title you gave them 2 years ago.
All right, trap 2 is penalty rates and overtime. See this massive 2.5x multiplier? That is the public holiday penalty rate. Sundays, they're time and a half. What really catches owners off guard here is trying to run a generic flat rate payroll setup. You just can't run every hour at a flat base rate. The system absolutely must be configured to correctly apply those evening, Saturday, Sunday, and public holiday loadings. On the flip side, you also can't accidentally stack penalties and overtime together. The award has incredibly strict rules on what applies when, and getting this mixed up is exactly where manual spreadsheets fail and pharmacies just bleed money.
And that perfectly illustrates trap 3, the casual loading double count. So casuals get a 25% loading, right? But when they work a Sunday, the award actually provides a very specific pre-constructed casual penalty rate that already has that 25% baked in. The trap is taking that casual penalty rate and accidentally slapping another 25% loading right on top of it. You're double counting. And sure, overpaying might feel a little safer than underpaying, but it quietly and severely eats away at your profit margins during your absolute most vital trading hours. The goal isn't to pay them less. The goal is to pay exactly what the award dictates. Nothing more, nothing less.
Trap 4 brings us to minimum engagements and phantom breaks. The award dictates a minimum number of hours an employee has to be paid if you call them in. If you roster a short stint below that minimum, you've underpaid them, even if you paid the hourly rate perfectly. But honestly, breaks are the real silent killer here. Your roster assumes everyone took their nice scheduled break, but let's be real, on a crazy busy pharmacy floor, breaks get skipped or cut short all the time. If your payroll says a paid break was taken, but that staff member was actually out front handling a massive rush of customers, that is unrecorded, unpaid time. That right there is a phantom break, and it is a massive liability.
Finally, Trap 5 is record-keeping failures. If your payslips have unitemized allowances, or your rosters don't match the actual hours worked, or, and this happens a lot, if you're still paying last year's rates in September because you forgot the standard July 1st award update, you are incredibly vulnerable. Why? Because during an audit by Fair Work or a union, the burden of proof is 100% on you, the owner. If your records are a mess, you literally cannot defend yourself, even if you actually paid them enough money overall.
All right, moving to Section 4, the payday super threat. This is an accelerating risk that's going to amplify every single trap we just talked about.
So, what actually happens when payday super arrives? Just take a second and think about your current cash flow cycle. Up until now, superannuation has typically been batched quarterly, right? It gave you a nice little buffer. Well, that is changing.
Under Payday Super, employee superannuation has to be paid at the exact same time as wages. For a pharmacy with a big, mixed team, your payroll and super are about to become one massive, simultaneous cash event every single pay run. And here's why this is a huge deal. If your award calculations are already kind of shaky, moving away from those quarterly batches means the financial cost of getting it wrong will hit your bank account faster, harder, and way more frequently. You absolutely have to fix the foundation before this change beds in.
But hey, don't stress too much. There is a clear way out. Section 5. 3 steps to compliance to protect your pharmacy.
Here are the 3 non-negotiable behaviors you've got to adopt. Step 1. Run an award-aware payroll system specifically configured for MA 00012. You need to ditch the generic flat rate setups and those clunky manual spreadsheets. Step 2. Conduct regular classification reviews, at least once a year, and definitely when roles change. Sit down and match what your staff are actually doing on the floor to the official award definitions. And Step 3. Keep clean, itemized records. You need a system that captures real break times and itemizes every single allowance. That way, if Fair Work comes knocking on a quiet Tuesday, you can prove you're working instantly, no sweat.
I want to leave you with a final thought to mull over. Is your payroll system set and forget, or is it actually protecting your profit? Because in community pharmacy, those small, invisible errors really do compound. By actively managing these award complexities, you don't just avoid catastrophic back pay bills and a huge hit to your reputation, you secure your margins. And honestly, it frees you up to do what you actually set out to do, run a truly great pharmacy. So take a hard look at your classifications and your payroll tech this week.